The number of startups building buy now, pay later, BNPL, services is long. Just this year we've seen French BNPL startup Affirm raise a $130 million equity round, Billy's raise $11 million for BNPL in the Philippines, Leapaleta raised $12 million for the same effort in Kenya, and ThankaCash raised $5.3 million for fintech infra in Africa that appears to include BNPL service. There were other funding events and product launches, but that's enough of a sample for us to understand that private market investors around the world are investing in the consumer checkout and credit capability, even after industry incumbents Affirm went public and Klarna has grown to massive scale. The $29 billion Block Afterpay deal was also good for startup BNPL volume, we reckon. Until some recent turbulence, there's been good reason to consider BNPL startup investments sensible bets. After all, public market investors had pushed Affirm's stock to over $175 per share in late 2021 from an IPO price of $49 per share. And Klarna raised $639 million at a valuation of nearly $46 billion in mid-2021. With momentum like that, why not power up a host of BNPL services targeted at particular geographies around the world? The exchange explores startups, markets and money. Read it every morning on TechCrunch Plus or get the exchange newsletter every Saturday. All the warm and fuzzy of the above paragraph comes with a huge caveat, namely that the value of Affirm is eroded sharply in the public markets. After trading to just over $81 per share this week, an early tweet containing earnings data sent shares of Affirm sharply lower yesterday. The company's full results and earnings call failed to staunch the bleeding.